Okay, so we've answered questions 1, questions 2, question 3, and now we have 4. We have to compute gross profit earned by the company for each of the 4 costing methods in part 3. So what I'm going to do is I will set up this table. It's going to consist of sales minus cost of goods sold equals gross profit. And I'll do this for FIFO, LIFO, weighted average, specific identification. Okay, these are equals here. Now sales, I told you that over here, don't worry about the $85 and the $95. These are the sale price. Well, now you have to worry about them. So if I sold 420 units at $85 and 160 units at $95, that's my sales dollar amount. Okay, so I'm going to multiply everything together. 420 times 85 equals 35,700. And then I sold 160 units at a sale price of $95, and that's 15,200. So my total sales revenue amount is going to be 50,900. And that's going to be the same all the way across here. So sales, right here, sales is 50,900. So I'm going to put 50,900 all the way across for all 4 methods, because that is not affected by the cost. This is my sales amount, how much I sold it for, and I have to sell it for more than it cost me, because if I don't, then I don't make a profit. Okay, that'd be like punting on a 3rd down, if you guys know football. Okay, all right, now my cost of goods sold, I'm going to pull all my numbers from my cost of goods sold from each one of these sheets that I did. So here's FIFO, cost of goods sold 31,800. We'll go in here. LIFO, cost of goods sold 32,920. Weighted average. Weighted average, cost of goods sold 32,248. So 32,248. And then last but not least, cost of goods sold for specific identification 32,540. 32,540. All right. Now it's a matter of subtracting my cost of goods sold from sales to get my gross profit. So 50,900 minus 31,800, 19,100. 50,900 minus 32,920, 17,980. 50,900 minus 32,248, 18,652. 50,900 minus 32,540, 18,360. Now there's a concept that they wanted to talk about in the class that had to do with FIFO, LIFO, and weighted average, specifically these. Now, gross profit for FIFO is 19,100, LIFO is 17,980. This is the better gross profit. It's a higher dollar amount, which looks more impressive. However, LIFO is usually preferred in preparing your tax return. Why? Because nobody wants to pay taxes. So they will try to come up with as many deductions as humanly possible, or hope that their income is not that high. And so here the income is less than here. So companies many times will use LIFO because they'll use it as a tax advantage. Okay, this just looks more impressive. Weighted average, it smooths out the highs and the lows between FIFO and LIFO because 18,652 lands in between these two numbers. So a lot of companies just do this because it's just a good middle of the road number and averages everything out, so they don't have to worry about tax advantage or being overstated here or yada yada yada. The list goes on. Specific identification happens like if you're a car dealership, every car is listed by VIN number, and so you will track them specifically. It's almost like having a bowl of jelly beans and saying, I'm going to take 10 purple and 15 red and 5 licorice, and you're specifically picking out each individual thing. Okay, so these are the 4 different ways of costing inventory. Thank you very much for your time.